Welcome to Markets Now. I'm Michelle Rook with Tomm Pfitzenmaier with Summit Commodity Brokerage. And we are seeing the grain still kind of quietly lower here this morning with a few exceptions while the livestock futures are trading mixed. Tom, let's talk a little bit about, the hangover after the report here. We had corn and soybean yields both going up yesterday. Do we have all of that digested in the market? Because corn, we took out and made new lows again here this morning, didn't we?
Yeah, we did. I don't know if it's all digested or not. This weakness today is partially carried through selling. Partially the funds are short. They're comfortable being short. There wasn't anything to scare them in that report yesterday morning. Um, export demand continues to struggle here. I mean, the bright spot's ethanol production, and I'm guessing that's going to continue to be the bright spot. So. Without South American weather problems, the corn market's going to struggle. Now, I don't know if it's going to go a lot lower, but the upside potential is going to be pretty limited unless they have some problems. Now, part of all that's going on here is that there was some slight improvement in the weather forecast for the last 10 days or so in November for Brazil in particular. We haven't been watching Argentina that close. It's mostly been a Brazilian issue. So that may be part of it. Those weather forecasts have been somewhat unreliable, so that could all be different when we walk in Monday morning. But making new lows is never a good thing, certainly.
Yeah, so where do you think that projects us to on corn then?
Well, I think you could see March corn move back down into that not back in, but down toward 470, maybe even slip under that a little bit. There is some downside potential here. Not great, but certainly more selling, and funds again continue to be short and want to stay short. And if they add to those positions, that's going to keep the pressure on the corn market.
Yeah, what about soybeans? We did do a little technical damage there, but that market was really due for a correction anyways, wasn't it?
Yeah, you had a $1.10 rally ahead of that report. I mean, if that wasn't a classic buy the rumor, sell the fact situation, I don't know what is.
Yeah.
Now, you also had some South American weather concerns in the mix, and that was supporting it too. And the carryout bumping up to 245 is maybe not quite as tight as it had been, but it's still, if export demand should happen to shape up to China, for example, or to unknown, whatever that is, you could see that 25 million bushel disappear off the carry out and back to being well supported. If you want to make a good case for an upside, I guess beans are probably the one. Certainly, the strength in the meal markets helped that too. It's been a real consequence of South American, Argentine weather, really, that lack of competition with Argentine meal has really boosted that soybean meal market. Argentina is not going to have any beans available to crush until probably March or so. So that's a supportive factor that's probably going to continue through the winter.
Yeah, so if we don't get a change in the weather forecast as they're talking here for November or later part in November, how explosive could we see this market get, putting in South American weather premium?
Well, I think you could certainly see the January bean contract, for example, shoot up toward into that 1425 to 1450 area. I don't think that would be that hard to come by. You're also going to get, I'm assuming you're probably going to get the U.S. farmer a little bowled up, so they're going to be tight holders of soybeans. So that should be good for the cash market. Crush demand continues to be good because, like I said, the demand for meal export demand is good, and that's going to continue to keep solid crush margins going on in the U.S. and help support cash soybean prices to the farmer.
Yeah. So the wheat market didn't get anything bullish out of the report yesterday either. And that market, beyond short covering, can we say anything positive right now about any rally potential there?
Well, all that wheat market just kind of reacts daily to whatever news comes out of the Ukraine-Russia situation. So if they have blockades or they start bombing someplace where they ship wheat, then it goes up. And they get things resolved, they finally move out, and then wheat goes down. So the fundamentals of the wheat itself don't really change all that much. Crop sizes are fairly well set, so we just react to that Black Sea region news, and I don't know, that gets a little old, and it's hard to make the market go one way or the other very far on that.
Yeah, we kind of just chop around here, don't we?
Right, exactly.
Cattle market, boy, a tough down day yesterday. Some new lows for the move on the futures. Cash trade was lower. Do we keep going down here? Are the funds going to all head for the exit door, Tom?
I think you could see some more of that. I don't know if there's a lot. You know, this morning you've got December cattle basically steady at 174.35. They could slip back to 172. That wouldn't surprise me. But beef demand continues to be quite strong. The numbers are still, you know, a problem or a help to the prices in that respect. So I don't know. You've got the funds really got a little over their skis on their long positions in cattle, and we needed a sharp correction, and that's what we've gotten. I don't know that the fundamentals of the cattle are that negative at this price or lower prices. In some respect, it's a little bit healthy that we got a correction here and got some of that overbought situation cleaned up. So I don't know. I'm still not that bearish to the cattle market, and maybe a little more friendly just after having had a correction.
I was going to say we lost over $20 or about $20 anyways on the live cattle and much more than that on the feeders. So hopefully we're done with that. Hog market, what do you think there? We went up to the top end of the trading range, kind of broke out of it, but essentially we're still kind of sideways here, aren't we?
Yeah, my momentum indicators rolled over here a day or two ago, so quick sort of set up for a correction. Although, I think you're going to see December hogs find good support at $70. Demand for beef and pork continues to hold up quite well, despite all the problems they hear about with the consumer. Apparently, people have decided they're going to eat if they can't afford anything else. And gas prices have been working down, which gives them a little more money to work. Weakness in the crude oil helps in that respect too. So I think you're going to see pork find good support and actually probably firm up into the winter months.
Yeah, be nice if we got, those cattle hog spreads, I think had a big influence here recently too. When cattle were going down, did that not push hogs up? Wasn't that part of the play there too?
Oh, absolutely. I mean, they were trading it the other way for quite a long time. So when you start unwinding that, that's exactly what happens, right?
Yeah. All right. Well, thanks for joining us. As always, Tomm Pfitzenmaier with Summit Commodity Brokerage. That is Markets Now.